Hi, everyone. Welcome to the Timing Research Show for September 28th, 2015. My name is David Kosmeter. I'm the creator of Timing Research. Today we will be talking about the 105th weekly report from Timing Research. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports and you can download it there. I have Dave Landry hosting for me again, so I'm going to go ahead and turn it over to him.
Thank you, David Kosmeter, and thanks to TimingResearch.com for having me back again this week. Anka, let's go over to you. Sorry, we had an honor a while back. Anka, let's go over to you. Anka Metcalf with TradeOutloud.com. Tell us a little bit about yourself, and tell us a little bit about TradeOutloud.com. To you, Anka.
Okay. Hi, Dave. Thank you, everybody that is here and is taking the time off their busy schedules to step in and listen in as well. My name is Anka Metcalf, and I'm the founder of TradeOutloud.com, and it is a trading education firm located in Detroit, Michigan. We specialize in education for active investors and day traders for stocks, futures, and forex as well. I have been trading for over 14 years and have been active in the equities, futures, and forex arena for quite some time now. As a professional trader, I also managed accounts program, so I do run a hedge fund. And prior to becoming a full-time professional trader, I had some over a decade of experience in investment banking. Trade Out Loud also offers a lot of unique products to the market, such as custom-made trading plans, signals for active investors and swing traders. So feel free to visit our website at TradeOutloud.com.
Cool. All right. Next up, we have Dan Nyaradi of TradingGods.net. Dan, tell us a little bit about yourself and tell us a little bit about your trading.
Right on. First of all, thank you, Dave and Dave, for having me on the show again. Great to be here. Thank you,
Glad
everyone,
to have you back
today. And we got an interesting week ahead of us, I think. TradingGods.net is our new website. We used to have WallStreetSectorSelector.com. TradingGods.net is our new branded website. Be a trading god today. We focus on finding where the bull market is, regardless of what the market is doing. So we always are trying to find opportunities everywhere, trying to find those trading gods hidden in sometimes the rough trading waters. And we have a new product coming out hopefully in the next 2 weeks that is sure to please. So stay tuned.
Okay, cool. Look forward to that. All right, next up we have Kurt Capra of Pristine.com. Kurt, tell us a bit about yourself. Kurt's a veteran of the show also. Tell us a little bit about yourself and tell us a little bit about what you do over at Pristine.com.
Absolutely. Well, again, thanks for having us and myself. It's a pleasure. But Pristine really just focuses on price action, as that's what moves anything you're looking to trade, whether it be equities, futures, forex. So we break it down to just that, focusing on price. Fear and greed drive any market, no matter where you are in the world. So that's our focus, and we offer things like newsletters to multi-day seminars, one-day courses on specified niches, things of that nature. So you can check us out at www.pristine.com.
All right, cool. My name is Dave Landry. For those of you who don't know me, I believe that you can only predict the short term when it comes to markets. Like Kurt said, we only focus on price too. We don't we ignore all news and fundamentals and all other information. But even though you can only predict the short term, I think you can also stick around for longer term moves. And I'm slotted as a swing trader, and my first 2 books have that in the title. But I'll actually stay with a position sometimes as long as a year, or sometimes even longer, maybe several years, provided, of course, price continues to move in our favor. I have a 21-page report on my website which explains all this. Just go to, if the banner ad isn't up, which sometimes it is and sometimes it isn't, depending on what day it is. But if you don't see the banner ad for the free reports, just click on products, and then it's the first thing in the store there. Anka, let's go to you first. And the first question this week is based on any technical and fundamental indicators you want to use. Would you predict that the S&P 500 index will move higher or lower from today's close to Friday's close, which would be October the 2nd, and rate your confidence to that answer by estimating the probability you have predicted next week's market move. And then you'll also get a chance to flesh out your analysis in the next question too, just FYI.
Okay.
All right, to you, Anka.
All right, thanks, Dave. Well, from my experience, the only non-lagging indicator for me is price action and price in general. So it is really hard to make a prediction, and I take it one day at a time and definitely trade one day at a time. But current market conditions show that the correction is in progress, and there is still room to continue lower for short term. Although I do think that for medium and long term, the market is still trying to head higher, and I'm bullish biased for medium and long term. So definitely I see the market probably trying to test and going for the 824 lows. So this is basically my bias. So for short term, I see a bearish. I have a bearish bias, and for long term, still medium. For medium and long term, I'm still bullish biased. Well, until proven otherwise, and we'll just have to see how the support areas are being tested here. But other than that, I think that we're going to head into earnings season, and that's going to say a lot on market direction.
Okay.
Of international and national events, economic events that are still going to go on.
Okay. And Anka's trading from a bikini today on the beach. In a bikini on the beach.
Lucky.
Actually, I do that. I do that a lot.
Must be cold in Detroit.
Yeah. Anka, rate your confidence on a scale. Well, I'm sorry, we changed the question up a little bit. Rate your confidence to your answers to that question by estimating the probability that you have correctly predicted this week's market's move.
I don't know, 70%.
70%. All right, good job. All right, Dan, you're up next. Based on any technical fundamental indicators you want to use, would you predict the S&P 500 index will move higher by Monday's close of October 2nd, and then rate your confidence to that?
Sure. I think we're looking at a down market this week, especially after today's dive that is still in development. And as a sidebar there, the NASDAQ has just performed its infamous death cross, so I am watching that as well. I think there's definitely room for growth this week. However, I think we are in the midst of a correction, as Anka indicated, and I think it's going to keep going down, especially after last week's Fed meeting. I'm also watching the VIX this week. The VIX today has so far taken, the VIX index, the fear indicator, has so far taken a near 14% jump just today alone, which for the VIX index is not necessarily surprising, but it definitely is a good indicator of overall fear in the market. So I think that this week investors are definitely jittery, whether it's China, the Fed, the plethora of economic reports coming up this week that will give us a good light on the economy. Earnings reports, of course, we're heading into earnings season soon. I think we're looking at another down week overall.
Okay. And your confidence on that?
I'd like to think that any decision I make trading is very confident, so I'm going to put myself at least 85%.
85%, all right. All right, Kurt, you're up next. Same question.
I've got to pretty much echo the same sentiment as everybody else here in that it'll probably be a down week, just based on how we're starting off things so far. Got the Qs coming down to support level, which was put in first of the month, and so that's being tested. But interestingly enough, the spiders have already violated that level, so they are kind of leading the way lower. And while we may get a short-term bounce here, maybe the second part of today or maybe into first part of tomorrow, I think that once the Qs break this level, then the proverbial floodgates are going to open, and we'll be heading back down to lower levels. And then at that point, we'll see what happens, because longer term, looking at the monthly charts, we are still in an uptrend, as Anka alluded to. So bigger picture, things are still bullishly biased, but here in the short term, this coming week, I think that we're definitely lower.
Okay. Well, it's one thing that one of the complaints about this show is not a lot of controversy, and all three of us are. Oh, by the way, give me your confidence before we go on.
I'm going to go with 100% just because
There you go.
That's what the charts say, and if they change, then my bias will change with it, and just following what they're telling me to do.
Yeah, I mean that's what I was just thinking. Like, do I go with 100% just because it's just what you said because I'm doing what the charts say to do, or do I couch a little bit and back off a little bit on that? As I was saying a second ago, one of the complaints, so to speak, about the show is that we don't have enough controversy, and it sounds like today is going to be no exception. Everyone here, I think, is a price purist from what you guys just said, and girls, and so am I. And I think price and only price it should be used to predict markets, and everything else is already factored in. I'm going to go with down, and I'm going to flesh this out in quite a lot of detail in just a second. And by the way, you guys, if you want to practice or get it started now, if you would like, feel free. I would encourage you even to share your screens. But I'm going to go down with a confidence of 70%, and I'm going to show you why in just a few seconds. But for the most part, prices are headed lower, and we're below the moving averages and below a lot of resistance. And I'll get into all that in just 1 second. Anka, let's go over to you. And you might have some trouble sharing your screen from the beach, I understand, but what developing events, technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Well, today from the non-beach and this week from the non-beach, I will be watching the CB Consumer Conference that is going to come out tomorrow at 10 a.m., and I think that's going to tell a lot, and that might probably give a little bit more confidence to traders as to where the market is going to resume, probably. Also on Wednesday, I will be watching the ADP non-farm employment change that are going to come in at 8:15 a.m. On Thursday, the unemployment claims that are going to come in at 8:30, and on Friday, I'm going to end the week with non-farm employment change, and I think these are going to keep us in an upbeat environment till the end of the week, and these are pretty much the events that I will be watching throughout this week.
So, Anka, you keep an eye on all these events. Does that mean that you're a short-term trader?
I am a short-term trader as well because I do day trade as well. My primary style of trading is swing trading and active investing, but I do I tend to pay attention to whatever the economic releases are at that certain point to have kind of like a market gauge or a barometer as where the market is heading in the for a short term. So I would have better odds, higher odds for my trades. So if the market, let's say for tomorrow, if the consumer confidence is not going to be as encouraging for traders, the market is more likely to continue lower. So I'm going to focus more on short-term trades, even swing trades, throughout the week for a couple of days to 3 to 4 days, short biased.
Okay.
Yeah.
Cool. All right, Dan, do you next. What developing events, technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Of course. Did anybody see the blood moon last night? It was pretty
impressive. I missed it. Was it good?
Yeah. Superstitious.
We had an astrologist on once, and that was kind of an interesting show. Yeah, we did. I chickened out. I didn't go after him, and I guess I should have, but because I know David Cosman wants a little more controversy, but no, we left him alone. But yeah, I actually saw that mentioned somewhere today that that would have something to do with the market today, which I sort of chuckle at. Anyway, Dan, question to you.
Predictions like that. Anyways, I think the VIX index is a very telling indicator this week. It is a volatile index, but it is the fear indicator. Fear, I guess, could be considered volatile. So I'll definitely be watching the VIX this week to predict further market moves. Also, as Anka has indicated, and as I've said before too, we have a lot of economic reports coming out this week, which will give us a good pulse on what is happening with the economy. That being said, I also more on a long-term basis, I'm going to be watching what's going to happen with Speaker Boehner's resignation last week. I think his resignation from the U.S. House of Representatives might have an impact on markets in terms of who will take that seat. And largely into the larger picture of we have an election just over a year away. Investors might be holding on in a sense until we know who takes over again in 2016. Also, the Fed, of course. The Fed is always on my mind. And anyway, so I think, largely I'm going to be watching the VIX this week with a longer-term outlook, looking at the politics of all this and our economic reports. So.
Yeah, I was just pulling up the VIX while you were talking. It looks like it's just barely getting started right now. I mean, it spiked up to 50 in the last little slide, so we're not even halfway there. So it looks like it's got a ways to go for this.
It's got a ways to go, but it's still it's rising pretty hard. So we'll see.
Yeah, cool. Kurt, let's go to you. What developing events, and they can be technical, fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
I really don't have much more to add than what everybody else has already. Definitely got to be aware of the news that's coming out. Non-farm payrolls, those kinds of things, they're definitely drivers for intraday traders for sure, and then longer term as well. So, those are the types of things I'll be watching for as well. See how the market and traders digest that kind of information, as well as the political impacts of a potential government shutdown and things of that nature. So,
okay,
that's pretty much it.
Cool. Again, no controversy. That's okay though. That's okay. We could all get along, like Rodney King once said. I'm concerned about the amount of overhead supply in this market, and I did a couple of YouTubes over the last few weeks on that. So if you guys have time, you want to check those out, you people watching today, I'd appreciate that. Overhead supply, or I should say, my form of technical analysis. There's nothing magical about it. I don't worry about the blood moon, and I ignore all news and all these other things. But overhead supply is just likely an area where some trading has occurred. Well, actually, you can see it did occur. And those who bought during that area will be looking to get out at break even. And the longer and further we stay below that overhead supply, the more important it becomes. Sometimes the market will dip and snap right back through that base or supply, however you want to look at it. And that's actually a bullish thing. And I'm not a big mechanical trader, but that will test out. I'm a discretionary trader, 100% discretionary trader. But if you take a look at the S&P 500, I have the weekly bow ties drawn. The bow ties are just simply a 10 simple, a 20 exponential, and 30 exponential moving average. When they come together over a short period of time, especially after an all-time high on a weekly basis, this could be a very, very significant signal. Last two sell signals we had were in 2000 and in 2008, and that's off of all-time highs on those. And then we had major lows in 2002, 2003. We had a buy signal then. And we had a major buy. It was a little late to the party, but it was about 900 or so in the S&P when we got the buy. Then remember, all indicators do have lag, and like I think Anka said earlier, price is first derivative, and you want to look at that first. With that said, again, bow ties and moving averages and these other indicators that people use can be useful. They help to illustrate which is already in the charts. I don't see them as indicators, like they're going to indicate something, but they illustrate what's in the chart and what could happen, okay? So in this particular case, again, last couple times, 40-50% drops in the market since then. Of course, we have the death cross, which I think Dan mentioned a minute ago. And the death cross is just a 50 crossing below 200-day moving average, and that I haven't checked the NASDAQ today, but I'll take your word on it, Dan, that it did happen. There's nothing magical about a moving average crossing like that, but it's what happens afterwards. If a trend does develop afterwards, or I should say, you're probably better off erring on the side of whatever that cross is. So we had a cross to the downside. So as a general statement, you probably want to be on the short side of this market, or at least sitting on your hands on the long side, as long as those moving averages are rolled over to the downside. Now, as Rob Hanna a few weeks pointed out, it's not going to test out if you buy and sell every time you have those crossings. But it's what happens in between that I think is really important. And I think 2 weeks ago in the YouTube I did for my weekly webinar, I showed where a market could drop as much as 80% after these signals. So it pays to pay attention to these things. Don't rush out and try to buy and sell every time they occur. But as a general statement, you want to err on the side of the price action and err on the side of the moving averages. And since we've broken down from this range on this show, every week I've been saying, even if the market's oversold due to bounce, my prediction is going to be that the market heads lower. And I think your life gets a lot easier when you just look at the general framework, look at the bigger picture, and try to stick to that side. And I hear you guys. I think it was Anka and Dan said something about the trend, longer-term trend still being up. And that might be true, but right now it looks like we're getting to roll over on a weekly basis, and that's got me concerned again. Okay, let's go back to you, Anka. And question of the week is, let me get to it. It's about the Fed. The Federal Reserve did not raise their key interest rates last week. When do you think they will? And how do you think the market will react at that time?
Okay, although I was praying for an answer last night from the moon ritual that I've performed.
I'm glad I'm not the only one who thinks that way.
Did anyone actually see it? Did you see it, Dan? Or
I did see it. We saw it briefly out here in Oregon. It was not so much red, more of a yellowish hue, but it was
more
pretty
yellow.
So.
Okay. All right, I got you. All right, Anka, back
I took the omen as a sign. Today's declines indicate so.
You know, it's funny is once a year I get that email about you won't see it for another 2 million years about Mars being really big, and that happened about 10 years ago, and I actually did see that, and it was red, and it was okay, but it wasn't nearly as exciting as they made it sound. Anyway, Anka, I digress. We got off on a tangent here. You got me talking about the blood moon, got me all excited. I forgot what the question was. Oh yeah, Fed.
Okay, so I think a rate hike is inevitable, and I do not think this is this will be a negative for the market. And I think the market just needs to digest, and the investors and traders need to have a little bit of confidence. And let's not forget that a potential rate hike would do very good for the financial sector. So that being said, I think that would be the sector to watch.
Okay.
As to when they will decide on a rate increase, I think time will tell, and I think the economic factors are going to weigh in, and especially in October, November, and into the end of the year. It will be interesting to see if the rate hike is going to happen until the end of the year. That's pretty much what I think.
Okay, cool. All right, Dan, let's go to you. You're up next. The Federal Reserve did not raise, easy for me to say, their key interest rate last week. When do you think they will? How do you think the market will react at that time?
You know, we've been watching the Fed and this interest rate game for a long time now. I'm wondering if they ever will, or even if they can. I think the markets are so used to this cheap money being dumped into the markets instead of being injected into the economy. I think the Fed has definitely put themselves in a box. Raise and potentially crush things. Keep going into Never Never Land where we never raise rates, and the whole system could collapse anyways. I don't like to think in those dire of terms, but these are all questions we got to consider when talking about the Fed and how much power they have with this interest rate game that we've essentially gotten into.
I like what you said. Sorry to interrupt, but I like what you said about just dumping into the market instead of the economy. Somebody pointed out, not that you definitely would want them to do this, but it's kind of interesting, and they were using just one metric, and I think this is one of the first quantitative easings, was enough money to pay off everybody's mortgage in the United States. Now, not that should be their policy, but can you imagine the amount of money that would flow into the economy if everyone that had a mortgage was erased? Not that you want that to happen, but I mean, I guess it'd be a good thing. But it's amazing, and I like the way you put that. So they just dumped all this money into the market, And where has it gotten us? And the markets are still vulnerable. They still could obviously head lower. So good point there. I didn't mean to cut you off, but good point.
Yeah,
So
for sure. Well, and that's what's really interesting to me about this whole journey we've taken with the Fed ever since the crash. The market has reached multiple records over multiple time frames over the last 5 or 6 years, and the economy still continues to struggle along. So has quantitative easing really worked? Maybe it has for the right people, maybe the wrong people. I think that's up to everyone's own belief. But the longer we keep appeasing the market, I'm not sure how it will react once this Kool-Aid stops. I don't think it'll be a good reaction. I think once interest rates are raised, we'll probably see a bit of a shock in the market. I think longer term it won't be as big of a deal.
yeah,
But we are definitely getting in deeper and deeper into this rabbit hole of this free money, and the longer it takes, the longer we continue down and the longer we postpone raising rates, I think the more painful eventually it's going to be, particularly if the economy itself does not continue to improve. I think that's our biggest
I agree. Once again, it's like we're not going to have much controversy. Rob Hanna gave a wonderful lecture a few years back to the American Association of Professional Technical Analysts, and Rob's a friend of the show. He's on every now and then. And his point was that when the Fed used to ease up a bit, the market would really take off, but then it's taken more and more to get the market going. And he equates it to like a drug. At first a little bit gets you going, but then it starts taking more and more and more. And that's some of the he does a lot of really cool analysis, and that's one of the things that he showed in his presentation, which I thought was fascinating, yet scary at the same time. But that was a couple of years ago, and it looks like that could be getting to play out.
Well,
anything else? Go ahead.
Yeah,
Dan.
and scary is a good word. It is scary. We've never seen this before. This has never happened before, where we have continued to have this free money for so long. And I think that will have drastic consequences once we finally have to deal with it. Now, whether we are forced to deal with it because of a weak economy or whether the Fed decides to deal with it on its own, who knows? That's anyone's guess. But I don't think I think the growing pains with that process are going to be very painful.
Yeah.
And I'm not sure if the Fed really can raise rates without pain. So I think that's probably why they haven't raised them yet. But again, we're stuck in this box, this never-ending box.
Yeah, I agree. Kurt, let's go to you. Same question. The Fed Reserve did not raise the key interest rate last week. What do you think they will, and how do you think the market will react at that time?
To a certain degree, I don't really think it matters. At the end of the day, people are they're going to react however they will, and that fear and or greed is going to drive price up or down. A lot of times when the announcement comes out, as an intraday trader, you see a lot of volatility. You get the spike up, the spike down, so on and so forth. But at the end of the day, you can't look at a daily chart of the Qs or the SPY and tell me where the announcement took place.
Amen.
So it's not like there's ever any kind of big impacted day of the announcement. Impacts are felt longer term, but there are things that change after the announcement comes out and in between the next one that could kind of override whatever that decision was. So, as I said, at the end of the day, I don't know that any of these things really matter. The only thing that matters is how people are reacting to it, both from a short-term and longer-term point of view. And it's a good talking point to have, but when it comes down to it, how are you going to make money off trying to assume what the Fed's going to do or when they're going to do it? You can't.
Amen.
So,
Kurt, you're not helping our controversy out at all. I fully agree with you. Anything else on that before I chime in?
No, that's pretty much it. As I've said and continue to say, it really just comes down to price and being able to understand how these traders are feeling and then putting it within the context of the trend on your time frame. Because look, I might look at something short term and I say, hey, you know what? I think the market's going up from here. But somebody else that's got a longer term point of view on, say, a daily or a weekly, they may say, you know what, I think it's going lower, and we both may be right. So it's all about what your perspective is, and then just being able to read it in an accurate manner and not getting caught up in all the fluff. You know, this indicator, this news, that news. Right? You know that, and so that's kind of where I stand.
Yeah, cool. Yeah, you know, again, no controversy. I agree with all three of you guys and girls, or Anka and guys. And Dan had a lot of good points. There's no need to reiterate those, but I've been around long enough to where I remember it's almost like you would be praying for the Fed to do something, and it's like they would oh, we'll give you a quarter point. And it was so hard to get anything out of the Fed, and the Fed was, I guess, fiscally responsible would be a good word for it. I'm not sure when the switch got flipped. Maybe it was something to do with Helicopter Ben. But at some point they became like, well, our job is to make the market go higher, whereas before it was to do the right thing. And we've had a lot of guests on the show. And I forget who specifically, but I think more than one person said it, and so I'm going to borrow the term from them. It's like kick the can down the road. It seems like that became the new game with the Fed. It seems like they just need to raise rates and get it out of the way because everybody's so obsessed on that, and then they can go on to obsess on someone else. Again, I ignore all news, including the Fed itself, so it's probably just academic at best for me to talk about this. But like Kurt said, it's like it is academic at best because there's nothing you can do about it. You might get a little knee-jerk one way or the other. And I think, as Anka pointed out earlier too, is it really tradable information? You know, other than a day trade, maybe look for a false move one way, then play the other. I really don't see that where you could actually make any trading decisions based on this. Now, longer term, if a trend ensues one way or the other, then obviously you want to be on the same side as that trend once you have an established trend to follow. So, you know, I think it's academic at best, and there's really no sense wasting too much time on it. But I do think they've painted themselves in a bit of a corner, and I think they now have a problem. They've waited so long, now they're going to have trouble raising them when the time comes. Okay. Anka, let's go back to you. Any closing thoughts about what's going on in the markets, or anything you want to talk about, or any closing thoughts on TradeOutLoud.com?
I think that, you know, a suggestion would be to trade one day at a time, especially in this market environment, as we have been in a very bullish market environment for quite some time, and the trend might resume higher. And I think by trading one day at a time and taking short-term decisions will be the way to go, at least for the next couple of weeks. I do have actually some trade suggestions for some traders that are bullish biased, and I was actually scanning this weekend, and I did found this stock. It is American Electric Power, AEP, that is actually rather strong, and it does have room to continue higher for short term as well. So that would be for a swing trade short term. But again, oil continuing lower. I do have another suggestion, MRO, you know, looking for a breakdown. STZ as well is holding support, and that is as well a breakout candidate if the market should decide to reverse. And for Trade Out Loud, if you want to receive daily market bias and overview, we do have a free newsletter and as well with a lot of trading suggestions. And feel free to visit our website, TradeOutLoud.com. You're going to have a pop-up window, fill it out, and you're going to be the first to receive every week, every Monday before market open, our market overview.
Okay, cool. All right, Dan, let's go to you next. Any closing thoughts, remarks, or anything else you want to tell us about TradingGods.net?
Sure. Yeah. Just in terms of the Fed, I think all of us brought up a lot of good points about the Fed and how it might affect markets moving forward, especially with the interest rate hike. The only thing I'm worried about the Fed, in addition to what we already talked about, but I think the biggest fear is just if most of these companies are putting this free money back into the stock market, what's going to happen when that money gets more expensive? There's already not enough money going into the economy right now. we might see even less money going in the economy. If the economy is not strong enough to support that, that I think is where most of my angst comes with the Fed. But that's neither here nor there. We have a long ways to go until that happens. That being said, I'm watching the VIX this week. I think we're looking at a down week. And take a look at our new website, TradingGods.net. We were formerly WallStreetSectorSelector.com, but we have since switched over, rebranded, and simplified things. We have a new product coming out in 2 weeks. And so take a look at our website, TradingGods.net, sign up for our newsletter, and let's conquer these markets together. Thank you.
Cool. All right, Kurt, to you. Any closing thoughts on your trading, the markets, anything you want, and Pristine.com, obviously.
You know, my focus really has been more on Forex lately, and I don't know how much Forex gets attention in terms of the viewership and everything, but it really is, in my opinion, an awesome way to go about trading. I mean, it's of course susceptible to wild swings up and down, but you know, if anything, what isn't? And even in this market, you know, up until last week and how it seems we're starting this week, you go back 2 weeks and it was hard to get movement, you know, good movement in the market. There were a lot of narrow range days where we were just grinding it out, and it was just hard to scratch out some good opportunities. But with Forex, you know, it's always moving. You've got the London Open that's driving volatility, the New York Open later on in the day. You've got Japan and the New Zealand dollar moving. So there's a lot of opportunity to be had there. If anybody is, you know, maybe getting a little frustrated with their equity performance or even trading the futures, definitely consider Forex because it moves well. And I wouldn't suggest doing it on small time frames like a 1, 2, 5 minute chart, because it can tend to be very fast, and those moves, those swings against you can be very painful. But 15-minute chart, hourly chart, 4-hour chart, really, really nice. And you know, look, if you have a job and maybe you don't want to hold a swing trade overnight, 4-hour chart, you come home from work, you check it out, see what it's doing. If you don't like it, get out. If you do, hold on. And maybe you can't sleep well, you're a little anxious to see what it's doing, you know, get up and you can see where it's at. You don't have to worry about when price is going to open and where it's going to open. So definitely check that out. I mean, I have, or Pristine has, YouTube videos that I produce weekly talking about just a general overview. You can definitely check that out. But overall, it doesn't matter what you trade. You just have to follow the trend, follow the price action. Anything that I've said here about the markets would apply exactly the same to Forex. And so that's, at the end of the day, what it comes down to.
Okay, cool.
And I'd like to add, watch out for the new blood moons coming up.
Yeah, that's right. Dave Landry of DaveLandry.com here, obviously. I have a free newsletter that I put out several times a week whenever I put out a new column or new content. So sign up for that at my website. I do weekly webinars. Dave Landry's The Week in Charts, and I've been doing that for many years, too long to even remember. I now record those and put them up on YouTube for those of you who can't make it. It's every Thursday at 11 Eastern, EDT right now, but that'll switch over soon, obviously. I do have a very active YouTube channel. I have over 1,400 videos on my channel, so check them out as time allows. I also have a lot of educational material on my website. I make you walk through the gift store to get there, but that's okay. It's trust me, it's there. If you click on education, you'll eventually get to the free stuff. It is some good stuff there, if I say so myself. Again, with the weekly webinars, just bring your questions on trading. Dress as casual, drink plenty of fluids. I think we don't take ourselves too seriously in the show, so I think you'll enjoy that. Any questions, just shoot me an email at dave@davelandry.com. I personally answer all my emails. Again, you know, I know I say this quite often, but I think this was a really good show. And I think we had some really good guests this week. And when I saw the lineup, and I know I say this often too, but the veterans of the show that are on today, I was looking forward to the show, and you guys and girl did not, and lady did not disappoint. So thank you for being here today. Let me go ahead and turn it over to you, David Kosmitter. Again, thanks again for having me as your host.
Right. Yeah, thanks, everyone. Great show. just want to remind everyone who's watching that you can go to TimingResearch.com/current or TimingResearch.com/reports to download this or any past reports there. Also, later in the week or early this coming weekend, go to TimingResearch.com/current survey, and you can participate in the survey, which will be the data that generates the next report Sunday evening. Also, be sure to join us next week. We got a full lineup scheduled. Jonathan Rose is going to be on for the first time. Also, Matt Buckley, Neil Batho, and Jim Kenny will be back. And of course, Dave Landry will be back to host. And just want to thank my guests for this week. Anka Metcalf of TradeOutLoud.com, Dan Nyaradi of the new TradingGods.net site, Kurt Capra of Pristine.com, and of course Dave Landry of DaveLandry.com. Thanks, guys.
Thank you.
Thanks again. Thank you.
Thanks.